So, hello traders, and welcome to yet another week, whereby we are going to look at the weekly market snippets, what happened last week and what we're anticipating this week. So, my name is Timothy Carey, and welcome. Let's see what the week was. So, this is a snapshot of the global markets and the US market performance. The Dow Jones was able to gain at least 3.4%. And year to date now we are back into the positive 0.3%. S&P 500 gained 5.3%. And year to date, positive 1.3%. Nasdaq gained last week 7.2%. And year to date, we are at negative 0.5%. So basically, what you are seeing is that the indices have been be able to give positive gains, and the key drivers is the easing of the US-China trade tensions and robust corporate earnings, because you have seen about 78% of the S&P 500 companies have reported their earnings report, among other companies. So also, in terms of volatility, the volatility index has dropped to 17.33%. That is the fear index. And this actually is indicating reduced market anxiety. So, meaning that at the moment, the anxiety in the market is reducing, because now we have seen the trade tension being able to ease. When you look at the DXY, it had a positive week at 0.5% gains. And year to date, you are still on the negative trajectory at negative 7.04%. But the dollar index has been bullish 2 weeks, I think 4 weeks consistently. Yeah, it has been bullish 4 weeks, 4 weeks in a row. So we have been able to see quite a comeback, quite a recovery, and this began with the easing of the U.S. China trade tensions, which has seen the dollar index being able to appreciate in prices, as that being the major drive. So when you look at gold, we have been able to see gold lose 3.23% last week, and year to date is 21.94%, right? So when we have now people, the market anxiety reducing, the US China trade tensions again reducing, so all stabilizing, then we start seeing now gold prices decline, because as the dollar index gains the strength, then we see gold also starts now to, when the dollar index gains, sorry, when the dollar index gains or strengthens, we start seeing a gold drop, right? Remember, gold is a safe haven. Anytime you have tensions in the market, people tend to run to gold or to invest in gold because it's a safe haven. But right now, with the calmness in the market, the trade tensions basically stabilizing, the fear index dropping to 17.33%. That is being able to reduce the market anxiety. Then we might see some more bearishness for this gold commodity. So US market highlights, we are looking at the trade developments, whereby we are able to see US and China agreed on a 90-day tariff pause, which boosted investors' confidence. So with these 90-day tariffs pause, we were able to witness a reduction of the tariffs. The US reduced the import tariff from 145% all the way to 20%. China reduced from 125% all the way to 10%. And these actually brought a lot of confidence for investors. In terms of earnings season, approximately 78% of S&P 500 companies reported positive earnings surprises, with an average annual EPS of 13.6%. So showing quite impressive performance, even irrespective of the trade tensions that were ongoing. So if you look at valuation, S&P 500, the forward price to earning ratio rose to 21.5%. Rose to 21.5, surpassing the 5-year average, and therefore this shows or brings more optimism in the markets. So In the Europe market, we saw the markets rebound, aided by improved trade sentiments and anticipation of policy shift. When you look at the Asian market, the Japanese market have showed modest gains. When you look at the China industrial production and retail sales data, that is actually what we are waiting, so that once it is released, it is able to help us to access the economic momentum in China. And in terms of emerging markets, there were mixed performance with some region benefiting from commodity price movements. So for more details in terms of the Asian market, the Europe market, the emerging markets, I think these we will discuss in our live market analysis beginning tomorrow. So make sure to tune in. So what is of importance again is to look at the commodities and the current movements. So when you look at the oil, which is Brent crude prices, which I am focusing on, these we saw rising to above 65 dollars per barrel, which again reflecting the optimism from trade developments. So when you look at gold, prices declined by prices were able to decline by around 2.5%, and this is because of the risk appetite, right? This is because of the increasing risk appetite, right? This is as a result of the increasing risk appetite. So in terms of currencies, the dollar index, we have seen fluctuations amid the interest rate expectations, which we were able to see not really major fluctuations, because the price rose to about last week it rose to about 102, about the 102 levels, but later on the price retraced to about 101. That's where the week closed. So, and this is because of the interest rate expectations. Now that we had some quite we saw a reduction in inflation in the US, whereby we are able to see um, we witnessed the CPI year after year decreasing from 2.4% to 2.3%. We were able to see also the PPI data, which also is a measure of inflation, whereby it decreased PPI month after month from 0.0% to negative 0.5%. And we saw the core PPI reduce from 0.4% to negative 0.4%, right? So then key geopolitical and policies to watch. So this week we have the G7, right? We have the G7, which will be taking place on between 20th to 22nd in Banff, that is Canada, and it will be focusing more on trade policies and global economic conditions. So also we look at the US trade policy, the ongoing discussions on tariff implementations and potential adjustments. Remember, the US mentioned that they have about 81 countries that have submitted their negotiations. So it's important to follow up in terms of what really this negotiation leads to, or the deal that they are able to come to agree on. So in the European developments, we are looking at the UK and EU summit on May 19th to address post-Brexit economic relations. And this definitely we anticipate to have some impact for the GBP and also for the euro, depending on the kind of discussions that will be taking place. Right. So when we look at corporate earnings this week, we are looking basically at the Home Depot. This should be Home Depot, not Hope Depot. Then we have Intuit, and then we'll be looking at the Zoom Communications. But last week also we saw companies like Walmart reporting strong earnings, which indicated resilience in consumer spending because they are in the retail sector. And so the upcoming reports for Home Depots, also we have a lower company. These will provide further insights in terms of the retail sector. So in the technology and services, we are looking at earnings from Snowflake, companies like Snowflake, TJX, Trip.com. Also, we are looking at the Broadcom and Broadcom, mostly Broadcom, and Meta, which are nearing potential buy points, reflecting investors' interest in AI-related stocks. So we might want to keep a close look, a close eye on Meta stock because of these potential buy points, which are going definitely to affect the prices, right? So in terms of the economic calendar, we are looking at tomorrow being a quite a cool day fundamentally, because there are no high impact news. But on Tuesday we have the RBA cash rate at 7:30 a.m. Which will affect the AUD. Then we'll be having the inflation data, CPI for card at 3:30 p.m. on Tuesday. And on Wednesday, we'll be looking at the inflation data for GBP. We'll also be looking on Thursday, the PMIs, the French PMIs, the German PMI, and the flash manufacturing and service PMIs for Euro and GBP, and also for the USD as well, and the unemployment claims for USD. And then on Friday, we'll be having the retail sales, both from UK to affect GBP and also from Canada to affect the Canadian dollar. So that's what we have for the week. Now, in terms of investment considerations, it's important to look at the market sentiments, whereby we have a positive momentum driven by trade developments and earnings. We anticipate such kind of market positive momentum. In terms of risk, we are looking at the potential rising inflation and interest rates, and also geopolitical uncertainties. All right. So with that, let's jump into the charts and see what we have. Okay. So in the charts, we are going to begin by looking at the DXY. So before even we look at the DXY, I want to take this opportunity to thank everyone that got an opportunity to join the last Friday's YouTube live stream. It was a successful one. We were able to gain some pips. We traded Euro GBP setup. I mean Euro USD and GBP USD setup, and also the Nasdaq setup, which gave us quite some good amount of pips. So this week, what we are looking at from the weekly time frame, as you can see, the last 4 weeks we had the dollar index being in a bullish momentum. You can see the last 3 weeks we had weeks, very long weeks at the bottom, creating more of a bullish pin bars. This week we have a very last week we saw a very long week from the bottom. Prices had risen all the way to about 102. Almost 102 level, and then we saw the price decline again all the way to 100, almost a 101. All right, so what we are looking here, technically we can see the prices have been able to break above again above these this was a support level, whereby now prices, once the prices broke below it, became the resistant level, and we see now prices gaining momentum again to push up, and they have crossed above this level. So now turns again to be a support level. But if you look at it from the monthly time frame, you see still we don't have that key breakout from that particular level. And the reason why now we might anticipate the prices to push up, because if you look here, that's where we have the change of character, right? So meaning that now we might anticipate the price to push back to these levels, which is where we have um, a supply level, or whereby we have the demand, I mean not the demand, but where we have the order block, the monthly order block. So from the weekly time frame now, we, before the price even gets to those levels, we want to really keenly look at this particular level here, and this is a key point that we might anticipate the price to react to. So we might see the price push up to this particular level, and then now we see the price drop. Remember, right now the DXY we have with the inflation data, both the CPI and the PPI, coming out softer than anticipated, and therefore increases the chances of a July rate cut, probably a July rate cut, and therefore or even a June rate cut, but mostly maybe a July rate cut, and therefore these might really cause some a bit of instability for the dollar index. All right, but technically this is where we are looking at the prices. All right, this will be my first target. So once prices reaches here, then we'll be able to see maybe probably what happens. That is from the daily time frame. I mean from the weekly time frame. So when you look at it from the daily time frame, then this is how we can be able to manage our risk or to adjust our levels. All right, so then from the daily time frame, what is clear here, you can see the market is creating those series of higher highs and higher lows. Right, so that is very evident there. So we anticipate the market to push and continue creating the higher highs and higher lows. So where we are looking at the market coming is the previous the weekly high. That's where we have the weekly high, so at around 101.97. Okay, so almost 102. So anticipate the market to push up fast, and so that it can create a higher high, and then now that continuation of price movement all the way to that particular level. But remember, again, this is the projection. There might be some news or some events that might happen and cause the dollar index to weaken. And the reason why, as a trader, you need to be very knowledgeable, or you need to be very keen in terms of researching what is really trending or what is happening in the financial markets. All right, so that's what we are looking at from the daily time frame, from the 4-hour time frame. Or before we go to the 4-hour time frame, so if prices are able to break below this particular level, because this is the major low, so in case we see a bearish trajectory and we see prices break below this low, then what it means is that we might see more bearish in terms of the dollar index. But right now, as things stands, we are looking at a more bullish scenario. That is the highest probability for this dollar index. So even from the 4-hour time frame, we are seeing the same scenario. You see where the price came to this order block. That is the weekly, the 4-hour order block. Price tapped into that, and then now we start to see price pushing on the upper direction. So as I said, I'm looking at the prices coming to this particular level, and then this level too will be very significant. All right, though there are two levels that are close, very close to each other, but again, we cannot ignore that level because it's quite very important in terms of dictating what the prices are going to do next. Okay, so we are looking at a bullish sentiment for the dollar index, not unless the sentiment shift maybe to bearish, depending on what maybe probably the news that might transpire in the market or something of the sort. Then once we see a change of character, then we'll be able to see, we'll be able to be more bearish for the DXY. But right now we are looking at a bullish sentiment. Okay, so then we look at gold. So for gold, this was the setup for last week, which the price actually hit the TP on the same day, on Monday. I did the analysis on Sunday, and I gave this setup, and the price hit the TP on a Monday. Right, so we were talking about 1,232 pips. Okay, so what happens, for instance, if you take you traded this setup, then what it means is that for that week, then you should be good, all right, in terms of your targets. But if you didn't trade, maybe probably if we say trading on a Monday sometimes can be tricky. Let's say maybe you didn't trade on a Monday, so we had a very nice setup which materialized on a Thursday. So the price rose all the way to this particular level, which is the 1-hour level. We saw the prices come all the way to that particular point, and then we had a very nice drop. Right, we had a very nice drop from all the way from that particular point. So the price dropped about 924 pips. Okay, so it was quite significant. Again, also Another way that we could have taken at setup, we saw the price break below this point of support. Okay, so then we see the price came to retest here, and then we had a very nice drop, whereby the price gave us about 700 pips. Okay, so that's what we are looking at. Even if you are eyeballing some sells, some buys, we saw the price came all the way to these particular levels. If you go to the lower time frames, you'll be able to see this was quite a very key level. There, whereby we saw the price tap into that level, and then we saw the price push up. So whichever way you are looking at it, at least it was quite clear. So let's look at what we are anticipating for this particular week. So when you look at the weekly time frame, right, when you look at the weekly time frame, we had talked about the prices coming to this particular level. It has tapped the weekly order block, but I was looking at a scenario whereby the price can be able to tap at least the engulfing, and then when you come to the lower time frames, this daily order block. All right. So, but from the weekly time frame, last week it closed quite bearish. Okay. So looking at it even in terms of maybe power 3. So I mean not power 3, but looking at it also in terms of CLT, we see this was a bearish candle. All right. Then we saw this candle push up to take liquidities. Then now we see the price drop. So this week, what we are looking at, or the bias that we are looking at, is a bearish sentiment. All right, we are looking at more bearish prices for gold, and I'm looking at a situation whereby the prices are able to drop back all the way to around 3,000 levels. That will be the first point of interest, or that will be the first level that I'll be looking at for the prices to drop to. All right. So, but let's go to the daily time frame, 4-hour time frame, so that we can be able to draw our zones. So the price started dropping from this particular level. That's why we have the 4-hour order block. So what are we anticipating? So first of all, we are looking at the prices coming back to where the lows here, attacking these sell side liquidities. All right, so that's where we have the sell side liquidity. So I'm looking at a scenario whereby the price can be able to push all the way down to this particular place. All right, take these sell side liquidities, and then now we see maybe probably a retracement. Okay, so something like this, let me demonstrate, maybe something like that, then a retracement, and then now for the prices to gain the momentum to come all the way to this particular level. Remember the first from the daily time frame, the first point is around 30.54, right, 30.54 level. But if we minimize the risk from maybe that, we draw this from the 1 hour of the 4-hour time frame, so it's almost the same level where we are anticipating the prices to come to. So these particular levels of 30, between 30, 35, 30, 37, and 29.95. All right, 29.55, I mean. So that's what we are looking at. So we are looking at a more bearish sentiment. All right, we are looking at a more bearish sentiment. So what happens in case the price pushes maybe back to this particular level? So this is how we are going to eyeball our entries. Remember, at this particular point, we have some gaps that have not been filled, and we have seen this level has already been tested, and the prices had begun pushing down. So in case we see the prices pushing up, approaching this level again, then there is no taking of trades, not unless we see rejection of prices, because this level is already tested. And therefore, what I might want to look at now, I can delete this setup. So what I might want to look at now is for the prices coming back to this particular zone, all right? Because that's where we have that 4-hour zone, okay? And these can give us a potential selling opportunity. So this is how we can be able to eyeball our sell, all right? So looking at the prices to push at least downwards, maybe to take these liquidities. But again, remember, this is a weekly setup. So what might happen if you are taking this setup, then you can go to the lower time frames and look for ways that you can be able to have your entries, all right, or to enter the market with minimal risk. So this basically shows us the trading range for the week in case we're gonna be bearish. So the first level is in case the price pushes up to fill this gap, because here we have the gaps at this particular point. And what we know for sure is that the market really don't move in gaps. We anticipate the market to fill those gaps, all right? So in case the market pushes up to fill the gap, then that's how we are going to take our selling opportunity. But in case we see the market because this has been quite a high probability or a quite strong level of support this particular point. So we have seen the market break below that point. Then we are seeing the market tends to push again on the downside, right? Breaking below it. So it came all the way to this level. So from this level, this is how it was quite an entry opportunity. And this entry opportunity, we are looking at the prices coming back to take out the sell side liquidity that we have here, right? So what are we, or what should we project now in case the price doesn't push up to fill the gaps? So what we want to see is the price drop all the way to this particular point. And what we can do basically is go to the lower time frames and now try to look at ways that we can be able to have our re-entries, all right? So what I'll be looking at this particular point, because if you go maybe to the 30 minutes time frame, if you go to the 15 minutes time frame, you see the price has already started creating lower lows and lower highs, all right? So what this tells me is that in case the price comes back to this particular point, then we can have a re-entry, all right, using this maybe the 15 minutes time frame, the 1 hour time frame, all right, at this particular point here, around that particular point, then we can be able to eyeball our re-entries in terms of sales. But in case the price comes here on a Monday, right, in case the price comes to this level on a Monday, then that is tomorrow. We see the price pushing here tomorrow. So higher chances that the price gonna create maybe at the high of the week, which is created on either on a Monday, Tuesday, or latest Wednesday New York session, and then we see the price starts to drop, all right? So but what I'm saying is in case the price pushes here, touches here on Monday, maybe the London session, that is tomorrow's London session, or tomorrow's New York session, therefore I'll still be hesitant in terms of taking the setup and wait until Monday closes. Once I see the price action for Monday, then it will be able to dictate us in terms of how the price is likely to do, right? Remember, the reason why I'm saying that is because we have some gaps here. So we might see Monday price come to this particular level, and Tuesday we see the extension of the bullishness, maybe probably to fill this gap, so that maybe it can create the low of the high of the week, and then now we can align ourselves with this particular entry. Okay, so this entry is not really quite really really high probability. That is in case the price reaches here on a Monday. So I'll be hesitant. But in case price reaches here on a Monday and then we see the drop, of course, we want to see a change of character. Maybe price take out these liquidities, and then now we see a retracement on the upper direction, whereby we'll be able to now look at, let's say, maybe for instance, the market drops from this point, takes out the liquidities, closes below that point. Therefore, we want to see the market come back now to this same level, which will now give us a high probability sell setup. So we will be using this particular OB that is around this particular level, all right? So in terms of eyeballing our sell setup, that is, if these liquidities are taken out, then we see price push to that level, then we are going to look for selling a setup, all right? So basically we are at a bullish trajectory, right? We are at a bearish trajectory. As you can see from the 4 hour time frame, the price is creating lower lows and lower highs, all right? The price is creating lower lows and lower highs. This is quite evident, right? Very evident. Lower lows and lower highs, lower lows and lower highs. So very strong bearish sentiment. So we anticipate that bearish sentiment to proceed, and we might see actually the price coming down all the way to this particular level. All right, we might see the price coming down all the way to this particular zone where we have the support level at around 3,000 level. Remember, this is a key psychological level. So that's where we want to see the prices come to. In case also the prices pushes down here, then we want to see the price now. Once it takes these, fills the gap for this second setup, then we want to see the price continue all the way down to this particular level, right? So that's my sentiment. But in case now we see price breaking above this particular point. All right, let me show you this. So here, in case we see the price break above this point, then we'll definitely be looking at the price filling the gap. So what you can do, and this is for the experienced traders, not the new base, because for the new base, it's good to trade with the trend. All right, so here we might see, in case the price breaks above that point, then we might want to see a retest, and then we can take a setup. These are about a risk to reward ratio of 1:2.18, which is quite a profitable one. So we might now want to see this kind of a situation. The price now taking a buy position that might make the prices to come looking at these gaps being filled. All right. So at least taking the TP 50% of the move, because sometimes we might have a 50% fill and then we see the price drop, or maybe sometimes the price can push all the way up and fill the gap completely. All right. So maybe just a quick overview. Was the trade setup that we took for GU in our live analysis. I mean, in our live stream, we were looking at the prices coming to this particular level, and we saw the price drop there quite smart. All right, we saw the price was able to drop to that to our target. That's where we were targeting, and we saw the price do that, hit the TP. So for this pair, maybe as a bonus, what I can say for this pair, looking at it from the weekly time frame, right? Looking at it from the weekly time frame, you see the kind of price action that is happening here. So in case we might continue seeing a bearish dollar index, then it means, in case we might continue seeing a bullish dollar index, then it means we might see if we have a bullish dollar index, we might see a bearish GBP JPY. But what has happened? Remember, this is the high, this is the low, right? This is the high, this is the low. The liquidities have been taken out, okay? So as you look at these candlesticks, let me probably delete these drawings. So these candlesticks, they are playing the same way you see the weekly candlesticks for the opposite of the dollar index, all right? So what we are anticipating now for GBPUSD, we are looking at some, because you can see the price here pushing up. So we were anticipating the price to come all the way to this point, take out the imbalance or take out the liquidities there, which has been done. The liquidities were swept, the buy side liquidities were swept. So we anticipate some more push on the downside. And we are looking at this particular level, all right? We are looking at the prices coming to that level. From the daily time frame, then we can be able to minimize to draw it that way. All right. Then so we anticipate the price to push down to this particular level. But see the kind of price action that GBP USD is forming. So here we have a very strong resistance that the price trend line, which is a resistance that the price has been pushing, trying to push above, but then we see a decline. So what we are looking at is, if you're able to clone this, then you're able to see quite a trading range. Okay, so what it means that we might be seeing the prices dropping maybe all the way down to this particular level. It can range within this particular zone most probably, and then we see now the price tap to this particular OB, right? So when you look at it now in the 4-hour time frame, right? When you look at it in the 4-hour time frame, so this has been the trading range, all right, the channel. So what we are looking at, so here we can be able to make it like that, all right. So what I will be looking at, remember, this is the neckline, all right? Remember, this is the neckline. So we are looking all, I'm looking at a situation whereby the price is able to break below that neckline, all right? That is in case the price gives us the head and double tops, all right? So this is the first top, this is the second top. And this actually here we can see maybe probably a market structure shift, right? And that will only be confirmed in case we see the candlestick break below this particular point. So once the candlestick breaks below the neckline, then we'll be looking at the price revisiting this zone, and now we can be able to look at the price respecting that order block, the daily, the 4-hour order block, which will be now an order block once the price breaks below that point, right? So it will be quite a high probability order block, and then we want to see the prices come down all the way to these particular zones. All right, so this will be a probable short position. Okay, in case that happens, that will be a probable selling position, and we will be targeting the price to fill or to take first of all the liquidity levels here, because we have the sell side liquidity. Okay, we have the sell side liquidity, and that's where we will be eyeballing the prices of GBP USD to come to that particular point. Okay, so that's what I am looking at for this particular pair. That's what I am looking at. And looking at it again also from the daily time frame, you see this was quite a strong level of support. This was quite a strong level of support, but we have been able to see the price break above below this support and coming up again to retest that channel. So I am more bearish. So if we come to the 1 hour time frame, I'll just be monitoring the price action tomorrow, what the price does. So in case we see the price come back to these levels, then we'll be looking at some entries that starting on Tuesday. You know how I trade. For me, I start trading on Tuesday. So because if you look at this particular point, we had the break of structure here, the BOS here, and we saw the price come to this particular level. I think this is how we were eyeballing our setup on Friday. So the price came to this order block, and then now we saw the drop. So what are we looking at now this week? So the price might push back again to this particular point, and where we are going to see more bearish sentiment, all right? Where we are going to look at more bearish scenario. Right. So with that, I don't want to really make it a very long video. So that's what I'll be looking at for the week. But for more insights, make sure you join our live market analysis, which we do Monday to Thursday, 10 a.m. to 11 a.m., whereby we are able to analyze more pairs and even go more deeper into it. All right. So that's what I am looking at for this particular week. So with that, guys, I think it was quite elaborate. It was quite detailed. Like I said, for more insight, make sure to join our live market analysis Monday to Thursday at 10 a.m. to 11 a.m. So from me, it's a big thank you. And as you approach the week, as you begin the week, I wish you a blue week ahead, and make sure to fine tune your risk. Don't risk more than you can afford to lose. Again, remember, Forex trading is 20% mechanics, that is doing the analysis, but it is 80% psychology. So make sure you watch your psychology, make sure that your psychology is up to par. So until next time, see you and have a wonderful week ahead.